You're focused on making important decisions to take your company to the next level. But who's counting? We are. Counting on trends and insight to move your business forward, operationally and strategically. Focused on helping executives achieve their highest potential. But Who's Counting is a podcast shedding light on and breaking down critical issues and opportunities for businesses. Brought to you by Anders CPAs and Advisors.
I'm Dave Hartley.
And I'm Missy Kelley.
And Missy and I just wrapped another episode of the But Who's Counting podcast. Our guest today was Tim Spihlman. Tim is a managing director of Lewis & Clark Ventures, Lewis & Clark Capital. Missy, I loved Tim's comments today. He had 3 tips, the 3 tips to make your business most attractive to outside investors. I also loved his comments around the importance of leadership teams, leaders, and succession planning. For me, I thought that was great.
Yes. And for me, my favorite part was the guidance on how to have an innovation mindset throughout your company. And that is to ask yourself every day, what can I do to make the business better today? And that's really the driver. And if you can do that from, the top of the organization all the way through, sounds simple, may or may not be easy to do, but it's a good question to ask. And that's how he sees success coming through.
Yeah. And I think that's how you drive innovation. So that was really interesting. So Tim drops a lot of great ideas in this episode. So to our listeners, enjoy the show. Welcome back to another episode of the But Who's Counting podcast. I'm your host, Dave Hartley, here with Missy Kelley. Our guest today is Tim Spihlman. Tim has served in both CEO and CFO capacities, plus serving as a board and audit committee member during his 20-plus year career. In recent years, Tim has shifted his focus from running businesses to the investing side of business by joining Lewis & Clark Capital and Lewis & Clark Ventures as managing director, managing investments in over 20 companies representing over $300 million in investments. Tim has significant experience in growth drivers of business, both organic and via acquisitions, having executed over $6 billion of M&A transactions. Tim came into the business world as a CPA and spent time working in Big Four as a financial statement auditor. Tim volunteers his time serving on 2 nonprofit boards and is a proud supporter of his Bradley Braves. So, Tim, welcome to the show.
Yeah, thank you. It's an honor to be invited. Appreciate the opportunity.
So Tim, it's interesting the career transition that you made. You were running companies, and then you decided to make the shift to investing in companies. So I guess talk to us about how did you learn the worlds of private equity and venture capital? Were you already familiar with the investing side of business before you made this switch? And have you been involved in buying and selling companies, extensively before? Talk to us about the background.
Yeah, no, great question. So the short answer is yes. In my role as operators, particularly with a financial background, you do get involved in transactions, that your companies make. And, I was head of strategy for a large global company for a couple of years as well. So then I was creating the investment thesis and executing those investment theses within, the company that we had, which is akin to what you do in private equity. Now, to your question, how did I learn it? What I would say is, I'm still learning. But I think I've got a good operating background that underpin a lot of the things that make acquisitions successful. But just as important in that question is who I work for, in that Lewis & Clark is a bit different in that it's a very operator-first, operator-centric business model. And I can tell you that the vast majority of PE firms, and I've worked with 4 or 5 different middle market firms based on the East Coast, if you went to them and said, I've got 30 years of operating experience and I'd love to now be truly in the partnership at private equity, they would say, hey, interesting, but no thanks. And so I found a partner in Lewis & Clark that really values operators first and says operators are who we'll build our business around, and that's who will make our decisions, versus someone who maybe is very steep in transactions, but maybe not quite as deep in operating.
What's your thesis in terms of how long do you hold? Is it basically, are you in and out in a couple of years, or do you buy and build together? How does that work for you all?
Sure. Well, I manage 2 different investment vehicles. So on the venture side, obviously, you don't take a majority position in companies. In round numbers, your LPs, limited partners, are expecting cash back in sort of the 5 to 7 year time frame. So that will guide a lot of what we do and how we think about when it's time to get out. On the private equity side, which is Lewis & Clark Capital, we've held companies. We've owned one now for over 20 years. And what I would say is we don't have a duration-based investing strategy. We have a capability and milestone-based strategy, which means we buy a company, we believe that we can get it from X to double A. We hope we can get it to double A in a certain amount of time, but the reality is when you get to double A, now you say, I'm at a point of optionality. Is it time to exit? Or do we double down, leave some chips on the table, go at it again? We have the flexibility in the private equity world. We're what's called a family office. So we're investing off the balance sheets of high net worth individuals, which in comparison, most private equity firms have limited partners. These partners come in, they expect to get their money back, as I said earlier, similar to venture, in 5 to 7 years. We don't have that same mandate on our private equity side. Of course, the folks that provide us the funding expect a return, just like anyone would. But we do have some flexibility on timing, which is great.
So were you already familiar with the investing side of business before you made the move to Lewis and Clark?
Yes, I was. In my role in the finance side of the world and in strategy, you're constantly making investments in your company. If your company is executing well, think about it this way. Every time you do a budget, it's simply an allocation of funds. So where do you want to invest, A, B, or C? Now, that investment is simple, like, hey, maybe I invest in technology, maybe I invest in my sales team, maybe I need more marketing support. Whereas today, maybe I invest in a company in this sector or a company in that sector. So investing is what I feel like I've done my whole operating career. I'm just doing it with a little different set of assets today than what I've done, but essentially a lot of the diligence and thought process is the same. The numbers maybe are just a bit bigger.
So what's been the biggest surprise that you've discovered since you've gotten involved into this type of investing?
Sure. So, and the reason I got into this side of investing is after, as Dave mentioned in the intro, a bit after sort of 30 years on the operator side, I kind of stepped back and said, hey, how can I best impact the most people for the rest of my professional career? I felt like I'd accomplished a lot of things personally, and I decided it was time to stop thinking about Tim's goals and start thinking about how can I be of broader help. And I wasn't sure how that would resonate, with folks. I mean, it sounds good and, oh, that's nice, but like, can you put it in action on a daily basis? Your company's struggling and I'm trying to positively impact people, but yet you got to hold people accountable. And what I have found, and I knew it and I saw it before, but I see it much more now, is when times are tough and you have the tough conversation and hold people accountable, people value that. I mean, they really do. When you say, look, you've got a lot of great skills, but you're missing the mark on this objective. And I want you to know that, like, A, I believe in you, or B, we don't think you have the right skill set, and we're going to try to find where your skill set is best utilized and then fill this gap. That, we all fear that in work. Like, I think I'm doing a good job, but what does my boss really think? And what I found and gained the confidence over my career is to, like, have that tough conversation and tell them what, like, you almost want to close your eyes because you don't want to see the face reaction when you say it. But people generally over time will respond very positively because then there's trust like never before. I'm being open and honest with you, but I'm doing it in a way that is not demeaning. It's a way that's saying, I recognize your skills and I recognize what makes you special as a person. However, that may not be lining up with what we need in this situation. And can we change it or not? And let's figure that out together.
So we're visiting today with Tim Spihlman. Tim, talk to us about, you have the benefit of seeing 20 plus portfolio companies. So I guess talk to us about the makeup of those companies. You've mentioned already that it's very operator focused, but do you go after specific, verticals or industries that you're going for? And then also would be interested in your take on how consistent is business across those 20 companies? Is it 80% the same and there's a little bit, or is it no, it's completely different? What's your take on that as well?
Yeah, great. Two great questions. Let's start with the nature of the companies, which then will help the second question, which is on the venture side, yes. We are very clear that Lewis and Clark Ventures, our second fund, which is what we're investing out of, we look for companies that are software companies working in the B2B space. Most of these companies will have a SaaS model. Where we invest in their life cycle, most companies are somewhere between $1 million and $5 million in recurring revenue. So they've been around for sort of 3 to 5 years. Most are not generating positive EBITDA or cash flow at this point in time. They have a visionary idea, and they're trying to, obviously create an alternative that is very appealing to current state in whatever sector they're in. On our capital side, we're investing in companies where we take an equity ownership position, and simply stated, what we look for is certain verticals like manufacturing, logistics/distribution, business services, where we look for opportunities where, number one, we find the right leader, which is even more important to us than the sector that we're in. And then with that leader, we ask ourselves, how much can we scale? How much fragmentation is there? How much organic growth opportunity is there? And so the simple question there is, like, what's the art of the possible? If you're at 25 million in revenue today, how do we get you to 125 million? Do I think this leader can do that? And so in both sides, it's very leader focused. On the capital side, again, the equity side, you've got a leader who's maybe done this for 10, 20, 30 years. Whereas on the venture side, you've got a leader that's done it for 3 to 5. So it's harder to assess, obviously, the leadership capabilities of someone who's managing a team of 12, all of which are programmers, and say this person's going to be great at leading a 100 person plus company. So, and your second question around volume is, what I would say is it does vary, but generally speaking, we've been pleasantly surprised at the resiliency of the U.S. economy on both the B2B side and, to the extent it's relevant, on the consumer side as well. So, we have, in the venture side, you've got lots of companies doing a 100% plus type of sales growth. That's common for companies of that size. But even on our more established companies, we're seeing growth rates that are, double digit, 10, 15, 30%. And so I would say it does vary, but macro level, we're very encouraged by where the vast majority of the companies that we have an investment in, how they're performing here in 2024.
So when you do find barriers to growth with these, small to mid-sized businesses, are you seeing a common theme? Do they look similar, or are they very different?
Does
Yes.
everybody hit the wall at the same point?
No, everybody hits the wall potentially at a different point, but there is one common factor. It's the leadership of the company.
Okay.
It is literally that simple. So the question is, there's multiple ways you look at the leaders, and one is, and it's been talked about in prior podcasts a bit, is fear of failure. Leaders get comfortable in what they've done, and hey, I know if I keep doing this, rinse, repeat, I'll grow. And then you come along and say, yeah, but how do we grow 3 to 5 times? Like, how do we put our foot on the gas? They have all the ideas. They have all the information. Them and their team have lived in this environment. They know the answers. Whether they're willing to make themselves uncomfortable, try something different, adopt AI, attack a new vertical, try to attract new customers, whether they're willing to do that is your biggest barrier to growth. And so that's tough when you find that, because then you say, can I supplement your fears with subject matter experts inside the company, or even as an outsider helping the company? How do we help you get more comfortable? Yeah, sure, we can give you capital, but what you really need is sort of the encouragement and the backing that says, let's try this, let's try it together. It may not work. We both know that, but we're going to go after it. So, that's why my earlier comment around leadership is so critically important when we evaluate, because if you're comfortable with your business as it is today, and you maybe have a desire to transact for financial reasons, lifestyle reasons, but you want to stay on, a lot of times you want to stay on because you've been doing this for 30 years and there's fear of, I don't know what to do. This has been my life. Okay, very human. I understand that. But on our end, we want to drive a different dynamic. And are you ready, able, willing, energy level, financial risk level, able and wanting to do that? And those are the really interesting conversations, the heart to heart with an owner during a diligence process, that I really enjoyed, because it's a very personal conversation.
How often would you say their response to that aligns with what actually ends up playing out? And the reason I ask that is that I can talk to owners who are considering selling, and they are often very passionate about the company because it's like a baby or a child to them that they've raised and they're so proud of. And when they want to hang on, I can see even maybe them believing themselves, oh, sure, yeah, I'm ready for that. I can do that. And then maybe getting into that and not being as comfortable with it. I'm just curious if that's something you see happen often, or are these people typically people that are kind of designed for growth and change?
Yeah, Missy, you're spot on with that question and observation. These companies are part of the fabric of who the person is. Okay, and so what happens is when you tell them, I'm taking part of your identity away from you. It's obviously not phrased in that way, but that's the reality. It's terrifying, and it would be terrifying to any of us. We recognize that, we know that, and so yes, the first time you ask the question to the owner, like, hey, you ready to go, or are you ready to go, or are you ready to drive harder? Some are ready to go. That's an easier approach, but many say I want to drive harder, and I know that a lot of times that answer comes out of fear of because I don't know what else to do. And then you have to slowly walk them through, okay, well, let's talk about what drive harder looks like. So we're going to have to do something different in your sales team. We need a different way to market. We may tinker with the product because we think maybe if we do left or do right, it will perform better. Well, I built that marketing team. That's my product. I have the patent on that product. And suddenly you're like, yeah, I know. And I might be dead wrong, but that's what we want to do. And so you share with them, here's my ideas, maybe dumb, about the future. And if you think like this guy is just crazy, hey, then like, let's just end this now. Because I've been involved in situations on the operator side where the owner hung around, well-intentioned, but there was not harmony at the board level. It's not fun for the board, and it's not fun for the operators. It's really not fair to the employees of the company.
Tim, our audience is mostly made up of business owners, business executives. So at some point, as you well know, they may get to a point where an exit or a transaction of some sort might make sense. So when you think about from a big picture perspective, you've already mentioned the importance of the leadership team, the strength of the operator, but I guess are there other things that when you go in and start looking at and evaluating a business, things that like are, man, if I see these three things, those, this is something we should really look into. And then conversely, are there things that you see that make you say, no, time out, they're not ready, or this isn't the right fit? I guess what would be some of the things that, when our listeners think about how to make their businesses attractive, what are the things that they should do and what are the things that they should avoid?
Yeah. So let's talk about the positives first. So, obviously we've mentioned it that the leadership team is critically important. And the biggest question for that entrepreneur today who's run a successful business is they've ran it, the business has done great, their customers love it, they want to leave. Don't blame them. So my first question is, great, we can't run it. Like who's going to run it? And so the number one barrier, and we see this very often right now, right? The baby boomers are retiring. The single greatest wealth transfer is happening right in front of us, where the retiring folks are moving wealth down, but they don't have a trusted family member in the business to bring it to. So then they say, hey, well, let's go to the private equity world and sell it. Well, our number one criteria is, well, who's going to run it? And let's diligence that person and then diligence with that person. So my number one piece of guidance and the number one thing we look for is, I need a leader, and if you don't have a leader, it's going to hurt your valuation, because that's an awful lot of what drives it. So number one is think about succession plan 2 to 3 years beforehand. It may be that I don't have one, but I've got a 3 or 4 people that when you put their skill set together, wow, I've got the superhuman. Great. That can work too, but you got to think about who's going to run it for the guys next. 1. 2, obviously the financials matter. And the neat thing about where we are today, we've been through COVID, we've been through supply chain shortages, now we're in a little bit of a demand slump. So your history tells me a lot about how your company has responded to very different environments. And so I love to look at the recent history because I'm like, did you price up? How did you get product when no one else did? How did you see demand coming or did you not? Did you lose market share, right? So the financials do matter. None of them are perfect, that's for sure. But simply, you've got to be able to see something that says, hey, our customers stuck with us when we had service problems. Our customers stuck with us when we did pricing. When we rolled out new products, our customers were enthusiastic and embraced it. So those factors are critically important. Three, and I would say important but not the most relevant, is what is the industry you're in? If you operate a Blockbuster video store, yeah, I'm sorry, I'm not interested, no matter how strong and talented you are. And so there definitely has to be something in the industry that says, hey, what are the tailwinds, headwinds in the industry? And just because there's headwinds doesn't mean we wouldn't buy it. But you also want to know that if the industry can give you a little bit of growth, man, that just makes every day a bit better. So those would be three things that we generally would look for out of the gate with any acquisition. I think the deal killer for us, if you do the inverse of what I just said, if the leadership team all wants to exit, like, okay, then I want to exit too. Like because you know more than me, and if you're all leaving, then I'm not coming, right? Two is obviously if the financials are choppy, that's not an automatic you're out, but it certainly is okay, we have a major problem. We probably think we can solve it, but we really need people in the business to help solve it. And so what are your answers? And then finally, as I said, the industry can be a problem. And the final thing I'll say too is, what is the culture of the company? If you've had somebody operate the company for 30 years and everybody looks up, to Jane because she's been the leader of this business forever, how do we respond? How do our employees respond when Jane isn't with us anymore? And that's really hard to assess, but it's something we're acutely aware of is Jane is gone, and now how special and fun is it to come to work? So that would be some of the pluses and minuses I would encourage business owners to think about as they think about maybe selling is in my future, near-term future.
Okay, so Tim, the theme of our season 3 of this podcast about Who's Counting is innovation. And so I'm curious, when you're looking at businesses and evaluating businesses, where does innovation and technology fit into the formula of whether or not a company is one worth investing in?
Sure. Well, on the venture side, so as I mentioned, we look at B2B SaaS companies. So technology is underpinning each of these. AI is, every single company we look at now has AI in it somewhere. I could go on and on about some of the neat companies we've invested in and the AI that they're using. It'll blow your mind. And Sky, I'll give you one quick example, and then I'll be more direct to your question. We have a company that is in the customer support area, and they do translation. So imagine that if you need people in Japan that can speak Japanese and English and German, the answer today is, okay, well, I set up a contact center in Japan, and I hire people that are fluent in those 3 languages. Well, you really don't need to do that. I mean, their technology exists to very easily say you can sit wherever. The customer question comes in native tongue, and you can answer it back in native tongue, even though you don't know that native tongue, because the computer does the translation for you. That's phase 1. I mean, that's actually quite common now. What's phase 2, which is really neat, is if the person who is working for you in your contact center is in Germany and they answer the question, and I'm German so I can say this very directly, like, no, that is wrong. You can also have the software say, and can you please soften the tone when you answer back? So you can actually move the tone of the answer to more friendly, less friendly, based on how the conversation's going, the tendencies of the person in the call center. And so, AI is really, we're just on the beginning stages of AI, but what you're already seeing in a lot of different areas where there's a lot of data, a lot of research, where the AI can zip through it with these large machines is fascinating to me. But more directly to your point, yes, our investment thesis on our Lewis and Clark Capital side, where we take equity ownership in smaller companies, is we want to bring significant sophistication to these companies. So that's number one, human talent. But generally speaking, these companies are generally way behind the curve on innovative processes and relevant and modern technologies. And so when we think about macro level, how can we improve companies? We like to believe that we're good evaluators of talent and can help leaders grow and be the best version of themselves, one. But two, we also bring technology to say, I understand we're doing that on paper today. I understand we're doing that in Excel, or that's done in somebody's head today. And tomorrow, we're going to innovate, and we're really going to drive better processes, one, and then better tools around it. And it's honestly fun, because what you see in these companies if you bring in somebody new who's maybe been at a larger company to a smaller one, they are literally shocked at how manual the company is. And I'm always like, I know, isn't it great? Because our ability to innovate and help the company become much, much better is like right in front of us. There's so much there. And so it definitely, Missy, is one of the key tenets that we always look at, which is what do we need to do system wise and process wise to make this company better. It also normally involves acquisitions. We're going to put 2, 3, 4 companies together. I'm going to have common systems so we can get a common source of data. So it's very central to our investment thesis.
So Tim, let's talk human capital for a minute, because I think that the importance of that is skyrocketed. And in your remarks, you've talked about the importance of the leadership team. But I think just in general, in terms of attracting a workforce, beyond just the leaders, but actually attracting people, figuring out what they want, who are the right people, and then once we attract them, how do we retain them? How do we develop them? What are some of the tips that, or the things that you see successful companies doing in the people game, that seem to be working well right now?
Yeah, I think number one, everyone wants to play on a winning team, right? You all are at Anders because you love the environment there, but also because Anders is really growing, has gotten a lot of acclaim, a lot of good recognition because you're doing great things. So first of all, if your employees, they're like, hey, we're in the news again today with this is positive, this is positive. So you need to create a winner. And so you need to have leaders that know how to win in whatever market they're competing in, one. Two, I also think that what you need first from the leaders, the tone at the top that trickles down, you have to be equal parts empathetic, strong emotional IQ, with equal parts accountability. Your employees need to know that what they do matters. They need to know that you value them and you treasure them as humans. But that doesn't mean you get a pass when you don't perform. And usually when you find someone who's incredibly empathetic, they always can see like, yeah, I know why you missed the deadline. I understand that. It's okay. Like, try to do better. Well, yes and no. You certainly need to be understanding of their situation, but you also have to say, but the business needed that yesterday, and we didn't get it. Therefore, our business is not as good today as it could have been. And I think employees, particularly high-performing employees, want to see the organization take corrective action when things aren't right. When you see something in your company that's not performing well, and at the water cooler, people just roll their eyes and say, well, that's Bill, he gets a pass on everything, it's demoralizing, right? And then you feel like, I'm working my tail off, Bill's golfing, but yet we got the same bonus, and he's getting promoted when I'm getting promoted. And so I think you create an environment where you say, I love you, you're special, you're valuable, but you still have to perform today and you got to perform tomorrow. Now, how can I help you? But at the end of the day, I need you to do that. And I think when you provide that structure to folks, and I'm really high level here, Dave. We could go into excruciating detail on, specifics, but to me, that's the key tenet that I think allows you to be successful as an organization and retain your individuals, or at least retain the ones that have the skill set that align with what your company needs.
Are you finding that any of these companies are struggling with the right talent, and that's part of what may affect their ability to grow and advance?
Yeah, I think every company struggles with that. Talent evaluation is such a challenging process, right? And even when you think you got it right, sometimes a year later, particularly in our venture companies where they're growing like a weed, 200% a year, they're 3 people, 10 people, 50 people. Suddenly that person who worked well at 3 doesn't work so well at 50. And so it is a constant challenge to say, do I have the right skill sets? Do I have them in the right seats? And can they stay there if I 2x the company from where it's at today? But it's hard. And it's really a journey. You never get to the destination where I have the perfect team. The minute you believe that, you're in trouble. So it's never ending.
So Tim, you mentioned earlier, let's talk about AI because it's interesting. You mentioned that its use within your portfolio companies, but I guess when you think about, when you look at a company and you evaluate them, what would you expect to see from an AI perspective? Because I think there's a lot of people now who are conflicted on the media says everybody's using it, but I'm not. So where's the reality? Is it, is it is it only larger companies? Is it smaller companies? Kind of talk to us about where you see AI actually being deployed and having a business impact today.
Yeah. Well, first on your general question and sort of the fear of missing out, it's incredibly real in AI today. And it's interesting. There was an article in the Wall Street Journal this week that said 61% of executives believe that AI is a game changer. And roughly the same percent said they had no confidence in their senior management team to execute it at their company. Yeah, exactly. And I don't think it's actually confidence. I think it's lack of confidence in themselves, like, because I don't understand AI, which most of us actually don't, right? And we understand line one. And so I think number one, if you have that fear, like, I don't really understand this, like I can't even get my computer to talk to my printer sometimes, how will I ever understand AI? You're not alone. We all are intimidated and in awe of this thing called AI all at the same time. So number one, relax and accept that, yep, it's new to me, but it's new to everyone. And as humans, things that are new are scary. And it's just like how to eat the elephant. We just got to take our first bite. And so where do we see it was the question you asked. And I think it's not about the company size, because obviously I work with small venture companies that are all over AI, and their ability to dream how it can impact businesses and marketplaces is incredible. Certainly big companies have the resources to deploy AI, and they've got boards that are saying you better be saying AI, and your quarterly earnings, you better use the word artificial intelligence. Yeah. So I think it's much more about the mindset of the company in terms of, what are we trying to drive, and is senior management banging the drum of innovation and innovation through AI? And so I think it's much more around the aptitude to grasp something new, more so than company size or company sector, for example.
Wow, well, this has been fascinating. So, Tim, we typically end each episode with a question, the same question. We call it our Make It Count segment. And this is where we ask the guest to share one actionable takeaway that other business leaders can count on. You have so much insight. It's probably going to be hard to pick one, in my opinion. But if you had one piece of advice on how to innovate, what would that be?
Yeah, well, thank you for the comment. I would say that one piece of advice is it's your mindset. Your mindset has to be, every day, it's my job to improve my company. And how do I do that? I do that through making sure my employees know that every day it's my team's job as well to improve the company. So if my mindset is, hey, we're talking about a problem and this customer is not happy and we're struggling to meet the customer's demand and our competitors kicking our backside. Yeah, okay, great. Everybody understands the problem. Now let's ask the question. We got to solve this customer problem today, but how do we make for a better process? Guys, what are we doing and how do we do it better tomorrow? And if you ask that question enough, what happens is your team then picks up on that. And they start asking the question, hey, how do we get better? Number one, you have to insert into mindset, it is our jobs to improve. By the way, that's what innovation is. Innovation, a lot of times people say innovation equals technology. Technology is a great tool in the United States to innovate, but innovation is much, much broader, than technology. So it has to be that mindset that says, what can we do better? You then create that culture inside the company. And then finally, as the third piece of that mindset is, when folks bring ideas, sometimes you got to let them run with it, even though you're like, that's not going to work. But you know what? I'm going to let them run, because if I ask people, the worst thing you can do is say, give me ideas on how to make it better. And then I shoot every one of them down. Eventually, people just turn off the knob and say, yep, that's happy talk from Tim. And so to me, that's the advice I would give. Mindset every day to bring it in, then have the courage to let somebody try it, even if it may not work. Because by the way, sometimes you'll get surprised, like, well, I'll be darned, that actually worked. Thank goodness I didn't say no. So that would be my guidance to business owners and leaders out there.
Well, that's great. Thank you.
So Tim Spihlman, thank you for joining us. We appreciate it. As always, when I hang out with you, I always learn something. So appreciate it very much. Thank you for taking the time, sharing your insights with our audience.
Yes, thank you. It's been fun.
Thank you for joining the But Who's Counting podcast. Make sure to never miss an episode by subscribing on Spotify or Apple Podcasts, and let us know what you think by rating and reviewing. Keep up with more Anders CPAs and Advisors insights by following us on social media through the handles in the show notes. We'll see you next time. This podcast represents the opinions of our hosts and the opinions of our guests. This is not professional advice, and we're not establishing a professional relationship with any listener. The content of this podcast is for informational and educational purposes only. And because each listener is unique, please consult a professional for any legal, tax, or investment advice, accounting services, or professional consulting needs that you may have.